What's up, my fellow wealth creators? Matty Ice here. In this video, I want to call out yet another just pretty awful and extremely misleading ad about indexed universal life insurance. And I think they're trying to tie it to the infant banking concept, which is where part of the infant banking concept anyways is setting up a dividend paying whole life insurance policy, custom designing it for high cash value, and then borrowing against it to acquire income producing assets and accelerate the wealth building process. I personally use my policies and implement infant banking with private money lending. That's how I prefer to do it. But when I see crap like this, I'm going to share my screen here in a second so you can see this ad. This is one of the reasons that I started my channel, because I'm as you guys probably know by now, I'm a huge fan of infinite banking with whole life insurance. It is really, really powerful. But when I first started going down this journey, I almost fell for the IUL charade. I almost went to IUL. I got stuck in IUL fantasy land because all you hear about is how amazing the product is, but nobody ever teaches you all the risk involved, all the things that the life insurance company could change and how that can negatively impact the performance of the policy over the long run. And once I learned that, I wanted nothing to do with it. But it's crap like this that originally got me interested in index universal life and almost maybe put a significant amount of money into it. And thank God I did my own research and I found content that told the other side of the story. Because once I learned how IUL worked, I wanted nothing to do with it. It's not to say that maybe that's the same conclusion that you will come to. A lot of the times it is, though, when you understand the risks involved. But it's stuff like this. Let me go ahead and share my screen. It's stuff like this I want you guys to be very, very careful with, okay? Because this is so misleading. It's unbelievable. I don't even really know how this kind of stuff gets past compliance. So this is an ad that I saw on Instagram the other day. It's one of those videos where the person is just kind of looking into the abyss and it kind of zooms in a little bit. The text gets a little bit bigger. That's what it is. But here it says, when you realize that you could pay $100 a month for a six-figure life insurance policy that you can borrow against it tax-free to buy assets that pay you passive income. All right. So the first thing that I want to call out here is this $100 a month. IUL agents love to try and convince people that you can put $100 a month into something and you're going to become massively wealthy. That's just probably not going to happen, guys. Like it might look like it on an illustration because IUL illustrations look really, really good. But putting $100 a month into a life insurance policy is probably not going to make you rich. Life insurance is not designed to make you super rich. Now, do you have the death benefit? And that can be a really good legacy play, etc. Sure, we could talk about that in another video. But don't be fooled that you're gonna put $100 a month into something, and now all of a sudden you're gonna be able to borrow against 6 figures worth of a death benefit in order to acquire income producing assets. That is not going to happen. If you are only able to put $100 a month into a life insurance policy, I talk about this quite frequently on my channel, you are probably better off in reinvesting that $100 a month back into yourself to learn how to increase your income so you can come back and put $1,000 a month into a life insurance policy after you've doubled your income. All right. But while the argument can be made that putting $100 a month into a savings vehicle like a whole life insurance policy is certainly better than nothing, I would argue that it's probably better that you reinvest in yourself to increase your income so you can put more into it. That way you're going to be able to fund it better. You're going to be able to do more things to just get more benefit from the policy. But the thing I want to clarify here, guys, is that, and this is why, like, this type of ad, it's a very big half truth. It's extremely misleading. You don't borrow against the death benefit. Okay. So for example, if I put $100 a month into a policy, and let's say I'm starting it at 25 years old, 30 years old, I'm doing an IUL because you will get more death benefit up front with an IUL than you will a whole life policy. All right. And let's say that gets me a 6-figure death benefit. Okay. I'm not all of a sudden able to just borrow 6 figures out of my my IUL at that point, my life insurance policy. All right. You can only borrow whatever your cash value is. It's usually 90 to 95% of whatever your cash value is. Now, for IUL, it's your surrender cash value, okay? Not the accumulation. That's a very big difference, all right? But typically, like whatever your cash value is, that's the equity you have in your life insurance policy, that's what you're able to borrow against. Okay, so if I'm putting $100 a month in and I do that for an entire year, I can have a 6-figure death benefit. But I'm only going to be able to borrow, let's say $500 or $1,000, which you're probably not going to be able to do that with an IUL because of the surrender period. All right, but just trying to keep this as simple as possible for example's sake, just to prove the point here that you don't borrow against whatever the death benefit amount is. It's whatever you have in cash value. Okay, so that's why this is really misleading. Like this person, this company, IUL Pros, is my first impression of this ad when they say that I can put $100 a month into something and then all of a sudden start borrowing against it to acquire income producing assets. That's a lie. That's like a borderline straight up lie, guys. Like, because you need a pretty significant amount of money to acquire income producing assets usually. Like we talk about real estate, for example. I might be able to put $20,000 down on a $100,000 real estate property, but I still need the $20,000 to put down. Well, if I put $100 a month into an IUL and I have $100,000 of death benefit, I'm not going to be able to borrow the $20,000 from my IUL to purchase that income producing real estate property because I don't have the cash value. I haven't funded it enough. I haven't put enough money into it. And it's not likely that you'll have anywhere close to enough money, cash value that is, in your IUL policy for years to come to buy an income producing asset if you're only putting $100 a month into it. That's why this stuff is so misleading. I'm not going to say it's intentional. At the very least, it's extremely ignorant. And it's just like, this is one of the reasons I started this channel, to expose this kind of crap so that you guys can be careful. Like, this is just really, really misleading stuff. And I don't want you to start putting money into something that you don't understand, that's based on false information, that's based on extremely misleading marketing. Like, that's just not cool, man. So anyways, I hope this helps, guys. Please be diligent. Please make sure you do your research. Always increase financial education. Know what questions to ask. Know what you're putting your money into. And don't fall for this kind of crap, guys. All right. Please just be careful out there. All right. So anyways, I hope you guys are crushing it. I will talk to you in the next one. To your success. Matty Geis is out.